Invest. This is Dude-diligence here, and today we're gonna talk about Tesla. I know I look a little bit grumpy these days because last week, my roommate got some strep throat situation. I know. How the heck did you get strep throat, right? And also, he also broke his ankle by walking down the stairs. Oh well, that's life on you, right? And also, my trading bot isn't really behaving correctly because since the tapering effect is really having a toll on the market, there's something wrong with my assumptions of how technical analysis related to buy-in points and volume profile. So then my portfolio has been bleeding because of that, and then I lost a couple of $1,000s because there is a algo malfunction. But yeah, so I stopped it. Hopefully that won't affect Monday, and it will be super awkward if Monday actually go back to normal. But taper effect actually takes in very, very heavy and severely on the 22nd, supposedly, and then it's gonna continue to bleed for a while. But today we're gonna talk about Tesla, and guys, bear with me. I know you guys don't think Tesla is a meme stock, but where's my pen here? Let me show you something interesting, okay? There's some similarities between Tesla and AMC and GME. Therefore, I think Tesla is about time to split, and I think it's gonna either have a 1-to-5 split or a 1-to-3 split. There's some detailed reasoning behind that. Because whenever a stock reaches like $1,200, especially when TA behaves like such cross. And by the way, the orange line, this is 150, right? And then this is 15 MA, and then I think that's 5 MA. When there's a deadly cross like that, it's inevitably either gonna do a parallel movement or it's either gonna do another cross movement. But I scraped so many data online, and then the probability of another upward movement, a very harsh upward movement trend, we call it ripping up, right? And then it's gonna like sort of intersect with the 15 moving MA. This is actually very high probability. But the reason why it's high probability is because for the past year and a half, or whatever months there exists, like, you see this thing? You see this? This is exactly like what we're talking about, similarity across and across, right? But the problem with that is, for the past few years, okay, for the past few months, let's just say months, this entire NASDAQ thing, right? TQQQ, SPY, everything in the market is behaving so upward trendy. And then because of that, sometimes people think the double cross thingy composed as a upward trend, but the entire market condition changed. Okay, it changed on November 8th, 2021, when we know tapering happening, and a lot of people are betting on interest rate hike earlier than June. So what's most likely to happen is you will have a flatten out of the 15 MA, and then the 5 MA was trying to touch the 15 MA, and then everything will trend down. And then probably you will have a support line over here and a support line over there, right? So $1,000 is essentially the support line. So how does big companies combat these support lines? They do a split. Because a lot of people don't understand that when there's a stock split, the value of the stock doesn't change at all. What changes is a public perception of the pricing of the stock, which means a $1,000 stock most people cannot afford. When they do a 1-to-5 split to $200, then all of a sudden a lot of people can afford it. Okay, then you will see a huge upward momentum building up on the volume, and you will see a ripping up to like half of the general price. If it's 5-to-1 split, then $200 to $500, it's gonna rip through butter if it actually happens. And I honestly think when it reaches $200, the Tesla's probably gonna repurchase some of its own shares for employee compensation, and then the general momentum of Tesla still won't change until like general. Sorry, I've been writing on my head right over here, right? So the general trend of Tesla won't change if it does a split all the way until 2023, probably at the end of 2023, depending on how taper and interest rate hike really affects Tesla. Because for those of you who don't know, Tesla actually have a lot of debt. But their debt holder is actually China, not really the US, okay? But this is not the main point of this video. If you see this, you see something similar. Let me show you something, okay? Let me show you here. You see something similar over here, right? Does this make sense? After a general period of memeing, you sort of trade flat. And then, well, since my algorithm is not really working, and I don't really want to show you guys my Linux operating system because I still haven't figured out how to sort of, my Linux is on my other computer. I haven't figured out how to like capture screen on Linux, because when you capture it, it goes into a very weird format, and then I have to like turn it, because I don't really want to do a lot of edits, so I didn't do that. So on my Linux, what I did is I basically stacked this graph with Tesla's graph, and then turns out the regression line is very, very interesting. So I can actually draw it here. So where Tesla is at right here. So Tesla moves like that. And then if you compensate it for residual value over here and there, you will figure that AMC during this period movement, let me show you this period movement, and then if you go to Tesla, predictable future movement over here is very comparable. So yeah, I don't see Tesla rip over $1,200, and I think it's gonna behave like AMC during this period of time. Okay. So for those of you who are still very uncertain and still holds a long-term call option on Tesla, maybe it's time to pull back a little bit, okay? Because if you go look at the January option chain, you will see that a lot of people think the fair value is around $1,000, and the majority of call options is actually sitting at $900, and those people already exited. So if you do a sort of like a detailed analysis, pricing analysis, you will know that a lot of the FOMOing over 950 are all retail investors. And then there are some people exercising their options, which created a very weird volume increase because of exercising the options over here. So like really where market's gonna oriented or rotate to, or oscillating to. Oscillating means like if you do a zigzag and then it's gonna go back to like the medium of that. So so right now it's trading at fair value, or trading at fair sentimental value on the market right now. So I don't know how to really name this video. It's just like similarity between Tesla and AMC. Just a very interesting fact that you guys want to see. And I will post another video later tonight or tomorrow morning about why AMC and GME is not squeezing. And I will post another video on MMAT. And I honestly think on MMAT there might be a buying opportunity there, especially if, you know, it breaks the upward triangle, whatever triangle technical analysis you guys are doing. I'll tell you guys that 3.8 actually might be a very good entry point for if you're gonna hold it for a little bit longer. And if you guys think that, you know, interest rate hike is not really gonna happen in the next 2 or 3 months, then you guys can start making that bet. But again, I'm also gonna post a reflection video on SAFE. The general trend is it's still gonna go over $75. But I bought a lot of short-term, medium-term option, and I lost a lot of money on that one. I will make a reflection video and tell you guys why, when the general market is going flat, and NASDAQ and generally speaking, American market going flat is really bad. And the world market is going flat, why you shouldn't trade low liquidity stocks, even though it's of value, right? It's very undervalued. Anyways, this is for the video. Hope you guys love it. Smash the like button and subscribe.